It's December. We have a market update for you, and this actually marks 2 years straight. We've been doing these monthly market updates. I'm David Shapiro with my colleague Lee Abraham at the Shapiro Group here in Austin, Texas, local brokers and real estate agents. And we're going to dive right in and talk about what's going on in the Austin real estate market. So we're starting off with the number of active listings, and here we're showing you the past 2 years. So you can go back to the times when things were really hot and there was only 341 homes, single-family homes available to buy in the city of Austin. And you can see over time as interest rates went up and seasonality, and now we're sitting at about 2,400 homes on the market. And so what does that mean for you as a buyer or seller here in Austin?
Well, David, as you look at those 2,413 active listings, you can see in that chart on the left, we've got the number of sales per month over some different time frames. At the top, it's the average number of sales per month for the past 12 months, and sales were more robust over the course of the year, 683 sales a month. You go down to the bottom of that chart, 30-day pending, much softer absorption, 523, but better than the closed sales from the past 30 months, which is just above at 445. So what does all that mean? Basically, you take the total number of active listings, divide the number of sales per month into that number, and you get a monthly housing inventory. And those are the bars that you can see to the chart on the right. And right now, as we interpret this data, we're basically looking at around a 5-month inventory of housing, David.
Yeah. And let's see how that stacks up. So over time, so going back to when things were really hot, there was about a half a month of inventory, and now we're at nearly 5 months. So it's about 10 times, right? Now, it's not 10 times the number of homes on the market, just to be clear, right? Because there was 340, that'd be 3,400. There's not that many homes. But because this is a formula that includes the demand and the supply,
Right.
that's why it comes out to just under 5 months of inventory.
Right. And as we go to that, back to the bar chart that shows the monthly housing inventory with the various data points, the key here is to look at historical metrics where typically a 6 to a 6.5 month housing inventory is deemed a balanced market. If you own a property, you're looking for a strong seller's market where demand is outpacing supply, values are going up. What you don't want to see is a buyer's market where you've got more buyers, fewer buyers than homes for sale and oversupply. When you start getting into 7-8 months of housing inventory, that's what you're looking at. The last piece to this puzzle is that the number of sales per month is anemic. It's low, historically speaking. And also, as we'll take a deeper dive here in a moment and look at the number of active listings, it's really been a fascinating study on this particular market that we've been in the past couple of years, where they tend to be moving in the same direction. Supply goes up, demand goes up. Supply goes down, demand goes down. That tends to keep the monthly housing inventory relatively steady. What we've been talking about, which we don't want to see, is the G word, the glut, where you've got the number of sales either stable or declining and the number of active listings really jumping up. That's a dynamic we haven't seen. And spoiler alert, as we forecast into 2024, that's a trend that we're forecasting to continue, which bodes well for a balanced market.
Yeah, and here when we're looking at this monthly housing inventory, one thing you'll notice is that last November, December, we saw about 5 months of inventory, and then come January in the spring, it came back down. So
Right.
what it looks like what we're seeing again is the new seasonality, and that this trend we're expecting will continue, and that things will pick up again in the spring, especially as we'll see as we talk about interest rates, what they're doing. And we have a new set of data that we're going to show towards the end of the Austin section here in a second. So let's talk about the number of sales. So they're down 17% year over year. So this is what Lee was talking about, that it's just anemic, the number of sales that are happening. And so 445 in November. We're recording this on the 2nd, so a couple more sales will come in over time here over the next week as agents upload the final sales for the month. But if you look back over 2018, 2019, this is like almost half the number of sales. So demand is just down. It's partly, I mean, since we're looking at November versus November, it's not a seasonality difference. It's probably just an interest rate difference.
Yeah, it's a hangover from the interest rate increase.
Yeah.
And the good news here, as we've forecasted, is that the average sale price year over year, it's up again year over year. Down month to month, ever so slightly, 0.3%. But really, the average sale price is a very interesting statistic, and it's in alignment with the forecast, as I said, that we made earlier. We're looking for that to continue year over year, some marginal small increases as we make our way into 2024.
Yeah, and if you're trying to time the market and you're like, well, prices need to come down, they don't. Like this is the stand. This is what's going to happen. Prices have stabilized, and there's really no indication because there's so many people that have locked in 3% and lower interest rates. Why would they sell when interest rates are 7% or higher? I mean, even if they're 6%, it's pretty hard to justify getting rid of your 3% mortgage. You know, as they start to come down to maybe 5%, then people can start to justify, okay, I really need more space. I'm going to give up my 3% mortgage for a 5% mortgage. That maybe is a little bit more palatable. But there's so much inventory that's been brought offline because of low interest rates. And that's why sales prices have been so stable,
Right.
even though demand has been dropping.
Yeah.
Now, days to sell up 26% year over year. And if you look back, 57 days historically, it's a little on the high side, but nothing to be concerned about here.
Right.
And this is again seasonality this time of year. It always tends to go up. So we'll see in the spring and be a much better indicator based on what this stat is doing.
Right. And then the number of new listings is up year over year and down month to month. So again, the fourth quarter is a notoriously slow time of year, and I'm not reading too much into this one way or the other. If we start seeing some really significant, and by that I mean 25, 35% year over year increases for several months in a row, then we're hoping that the sales will be matching that. And that's what we talked about earlier. Right now, relative stability.
Which if interest rates come down, that could be likely because there are so many people that have been waiting for interest rates to come down because they want to buy a new home, but they can't sell their home, right, until they can buy a new one. And so there will be a flurry of activity if interest rates drop. And I mean, we anticipate that all these buyers will come into the market. There's such limited inventory, which will show you that prices will continue to appreciate at a probably more normal rate, which in Austin is in like the 5 to 8% range.
Right.
That's generally what appreciation has been. 2021 and 2022 were the anomaly.
Correct.
And then the sales price to list price ratio, it's about flat.
Right.
So this is back in line where things were. I mean, maybe I guess it's a little bit lower than 2018, which based on the conditions, I think is totally expected.
Yep. It's the poster child of stability.
And then our listing inventory barometer. So this is the best statistic in terms of seeing real time what's going on in the real estate market. So Lee, do you want to break down what we've seen here in the last couple of weeks?
Yeah, the idea is that we're taking a look at how many new listings are hitting the market each week compared to how many pending sales. And if there's more new listings than sales, then the actual inventory is going up. Vice versa, you've got a declining inventory. So we can see that for dating back way before July, which is where the chart on the left begins, there were significantly more new listings than pending sales. With the seasonality now, Thanksgiving week behind us as we look at Christmas and New Year's, you can see the trend where the pending sales outpaced the number of new listings. And for the first time, we've got a supply-demand coverage ratio of less than 100%. And that means that the inventory actually dropped a bit in the most recent week that we've charted here.
And then I wanted to show, because, how many listings, 2,600 single family homes on the market. Wow, that seems like a lot when you look back to, look how many there were in early 22, just 600, 500 in 2021. So it feels like 2,600 is so many listings that are on the market. But when you look back historically and we go back to 2016, 2015, 2014, there's actually a good amount more listings then than there are right now. And 2016 was a strong market for the Austin real estate market. It appreciated. I'd have to go back and look, but somewhere in that 5 to 8% range. That is pretty standard. And there was over 3,000 homes on the market in November of 2016. So at 2,600 homes, demand has fallen. So that's really the issue here. But if demand picks back up, it's really not that many homes
Right.
available.
Yeah.
And so I think buyers sitting around waiting, like, well, I'm going to wait for interest rates to drop, or I'm going to wait for, which I guess there's two things. They're waiting for interest rates to drop because they want to be able to afford more, or they're waiting for the market for prices to drop. In both those cases, I think that's not the right thing if you're thinking about buying. The right decision is try to buy now, get in, lock in a home, lock in a price, and then you can refi later if prices do come down. So trying to time the market is never a winning strategy.
Right.
Or not never, but most of the time it's not a winning strategy.
It's not a sustainable strategy.
Right. And
So,
then we've got mortgage rates. So go ahead, Lee.
I just think that it's no secret that the rapid rise of the Fed funds rate, subsequently mortgage rates, really did dampen the overall market in terms of effective demand. And now we're, seeing some retraction in those numbers. I like this Freddie Mac infographic, David, because it really conveys a lot of information in a very succinct way. As of a couple days ago, their average rate for a 30-year fixed was 7.2. Hey, I remember back in, 1983, I bought my first house when rates dropped to 12%. So to me, I'm biased. 7.2 doesn't look too bad at all. If you're banking on rates to come down in the upcoming year, then the 15-year option might be a wise choice. But you can see that we're not at the peak, which is that 52-week range. And I kind of like the trend, David. I have an optimistic feeling that if we can avoid some real macroeconomic meltdown, whether it be in the Middle East or Eastern Europe or some unforeseen continent, that if we can have some stability into the first quarter, that we may well have a very dynamic market here in Austin. And I think that bodes well for sellers, as well as for buyers looking to take advantage of this interest rate dip.
Yeah, I totally agree. It seems like we're going to pull off pretty close to a soft landing, and that the Fed will have the ability to start lowering interest rates if they need to. And I think higher for longer was talked about, but it's hard to imagine. You fast forward, to the spring of 2025, that we're not seeing a much more robust and active real estate market. And in the scheme of real estate, which is something you should only be buying if you're going to be owning it for at least 3 years, probably more than 5, it's really not that long. So the window in the big scheme of owning real estate, which I've owned properties, some for over 17 years now. And so another year of an opportunity to buy before the flurry of activity picks back up is really not that long.
Yep.
All right, so that was the city limits. So now we have separated out the suburbs, and this is a much larger area in terms of the number of homes, because we're dealing with 2 other counties and multiple cities. So you can see there's 7,500 active listings in this area, much different than the 2,400 or so within the city. And Lee, I'll let you kind of go through and talk about the monthly housing inventory here.
Yeah, well, just following the same pattern, the same formula as in town, and also the same trend. So, David, if you look at the closed sales for the past month, 1,415, similar to the in-town number, which was depressed compared to the pending sales. And then also the actual monthly housing inventory calculations. If you're looking at the closed past 30 days, it's just under 5.5. If you're looking at the pending, just over 4.5. They've kind of moved into alignment a little bit, in town, out of town, in terms of the monthly housing inventory. And again, for right now, this is kind of where we expected it to be as we move our way out of 2023 and into the first quarter of the new year.
And then the number of sales per month is down 8%, down 21% month over month. And again, some of this there'll be more sales added as we get into the month here of December for November. So this might come up and be pretty close to flat.
Right.
But still, if you look back, obviously down from these big years in 2020 and 2021, and about even with 2018.
So average sale price not as strong, resilient, whatever word you'd like to put on it in town, and that really tracks back to the David Shapiro theory of premium real estate.
Yeah, buy in the best neighborhoods, best areas, and they hold their value better.
Right. But overall, nothing to be too scared about with those prices, as long as, again, there's balance between the new listings hitting the market and sales ticking up. You'll see this turn around a little bit. Wouldn't be surprised, David, to see some year over year average sale price increases in Q3 of next year, maybe a little sooner in the burbs.
Days on the market, so up 46% year over year, but still in line with 2018, 2019. So really nothing to be concerned with here.
And then new listings, once again, a little bit up year over year, down month to month. Just the same theme that we've been reiterating. This may be the least shocking report we've ever done, because everything that we're seeing is in alignment with what we've already said. And hopefully that's reassuring to those of you that are relying on our opinions for your investment decisions.
Yeah, you know what's interesting, Lee, is if we go back, to when we started doing these, it seemed like things were changing so drastically month by month that we even did a mid-month report one month. I think it was June of 2022, and so things were changing really drastically. I think the theme here over the last 3 months at least, maybe even the majority of this year, is just stability. Like,
Yeah.
okay, things are pretty good. If you're tuning in for the first time and you were to go back and watch the last couple months, it'd be very similar. Be very different than if you went back and watched the beginning of 2022 when things were changing much more drastically. So I think that's a good thing for the market that there's some stability. Transactions are down, and for some people that means they aren't able to really move because of the situation. They want to move to a bigger place, so that means they want to sell and buy. Some buyers feel like they have to wait on the sidelines. So I think it could be frustrating for both parties right now, and I think that that's going to change. So it's just a matter of time. Sometimes you get into these things and it feels like this is how it's going to be forever. It's
Right.
not. Okay,
No.
this is not the forever market. This is, just like 2021 was not forever. We knew that when it was happening. Although in the moment it feels like, well, this is it. Real estate's just going to go up 15% a year forever. No, that's not the case. Just like it's not going to, be the levels it's at right now forever. So keep that in mind as you're thinking about the future of your housing or your real estate investments.
Now, you may have a forever home, but you will never see a forever market. Just doesn't work that way, folks.
And then the sales price to list price ratio, again, not much of a story here. All right. Well, thank you for joining us on our December market update. If you have any questions, we'd love for you to comment them below. If you want to schedule a call with us to talk about your real estate goals, you're just even thinking about, hey, in 2 years, I want to buy. We're happy to chat with you and talk about what that might look like. You can schedule a call through Calendly in the link in the description, or shoot us a message, email, text, whatever works best for you. If you got a lot out of this, please share it with a friend and give it a like, and go ahead and subscribe so we can see you next month. Thanks for joining us, everybody.
Thanks, everybody.